Welcome back, folks. This is Basir Pirzada, your real estate broker and your loan officer, one-stop shop for all your real estate needs. Today, we're going to discuss the December 18th meeting by Jerome Powell, the Federal Reserve Chairman, and how he made references to his September projections and what he's projecting for 2025. So before we get into the details, please like, share, subscribe so we can continue to bring you relevant topics for finance and real estate. The first thing I'm going to do is play a video clip for you in which Jerome Powell is talking about the PCE inflation, which is the personal consumption expenditure inflation. So let's listen in.
Holds businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary by our dual mandate to promote maximum employment.
Okay, so as you listen to the video clip, you notice that there were references made to his September meeting, the September projections. So let me pull up a chart on the screen so I can show you some of the differences in the projections that have been revised since September. So as you look at the chart, back in September, they projected a 2.3% and 2.1% PCE inflation for going forward. But now in December, they're projecting a 2.4 and a 2.5% inflation for 2025. So from a 2.1% to a 2.5% PCE inflation jump, that's huge. So if you're a seller of real estate, that's great news for you. If you're a buyer, that's not so good news. And the next thing Jerome Powell talked about was the monetary policy. And once again, there were revisions since the September meeting. There were revisions to the projections. There were references made to his September projections. So let's listen into that video clip, and then we'll come back and analyze the differences in their projections.
We will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however,
as you listened in, it was very evident that while Jerome Powell is emphasizing that there's no set path and they're evolving and their projections are evolving as the data becomes available. But let me analyze some of the revisions to their projections. So let me pull up this chart, and on this chart you can see that for 2025 and 2026, back in September meeting, the Fed projected an interest rate of around 3.4% and 2.9%, but now in December, they have revised those numbers to 3.9 and 3.4%. Once again, they are revising their projections to the upside, which means that they are anticipating higher inflation in 2025 and continuing on into 2026. So that's a big jump. I know they always emphasize that they are tweaking their projections based on the data available, but to have interest rates revised in 3 consecutive meetings, September, November, then December, and now that the data is coming back contrary to what they had been projecting, and a lot of critics in the finance industry had suggested that the inflation may raise its ugly head and the Fed needed to wait, at least not do anything with interest rates in December. But they still went ahead and reduced the interest rate by 0.25%. You must have noticed that even the rhetoric coming out of the president's office, President Trump, has also been toned down, and he is no longer advocating huge interest rate cuts the way he had done before. So with that said, 2025 is going to be a year of higher inflation, and we'll bring you more news as they become available. Thank you for watching.